Hi everyone. So yesterday I went over the S&P. Now I'll go over um, this is crude, so I'll just go over crude. All right. So on the daily we see a downtrend. You can obviously tell it's a downtrend. Taking a look at the channeling down. Right. You had this here. This looked constructive because there's a lot of buying activity in here. But I guess they're not holding, or they're going to spring, or whatever. But trend is down, and and that's it. So now taking a look at the tapering chart, we see that this was heavy buying activity off this area. That's 220,000 contracts followed by 210,000 contracts, and it rallied. And now we're pulling back all the way to the origin. So it remains to be seen whether they're gonna come in and buy some more. But this is buying activity right here. Without a doubt, there's some buying here. This has 2.5 times average volume. Maybe they're short covering, I don't know. But there's some buying activity, and when it broke this area of this highs, 220 plus 210 plus another 220 contracts got bought right here, and it pushed price above that prior high, up thrusting it, and then the sellers came back in. Now we want to see at that origin whether the bulls are going to re-step in, or the sellers are just going to break it down. So what was going on here? Down, 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 and you had this blue dots, and all these dots just tell me, okay, they're alerting me. They're not signals. They're alerting me to see that, okay, it's time to start looking for the short or the long. Right, so I'm ready. And here's where the selling pressure came in, and market's going down, and you just need to see how it acts around these lows. This is the origin, because if you take a closer look at this, you'll notice that this up wave has 2.3 times average up volume, and the biggest in the last 5 up waves. That 2.3 is not trivial. All right, something's going on in here. This may be preliminary buying or something, I don't know yet, but something's going on here. All right, just have to wait and let them show their hand, or maybe just wait until the trend changes and then buy pullbacks, and until then just keep shorting. Anyway, the rest is all bullshit over here. I mean, nothing really to see, right? So what am I looking for in crude? Absolutely, I don't really see anything interesting. There was selling. This was the breakdown. This is a high volume area where they were selling, and then basically came up. They redistributed right here. How do I know? Look at the high. High has a lot of volume, and then it goes down, which means they're selling. How is this relevant? Because you get a lot of retests in that area. You easily take a short. So this is where the prior redistribution was, right here, right? And also when the trend is down and market is pulling back and there's heavy volume on that pullback, then you know that they're selling the bounces. Like here, you have a break, it comes back. This is about 28,000 contracts distributed, sold right here. Price goes down, and then they want to break these lows. So that's also another place of heavy selling on breakouts and breakdowns, and of course an accumulation and distribution and effort reward and absorption. Those are spots where you have high volume. Here's breakdown volume, bang, bang, and then it comes back up here. As it enters this area, the sellers come back, 21,000 contracts sold, and sell it. Now the question is, what the hell is this? There's 45,000 contracts right here. You see that? 45,000 contracts in that little block. What is that? And you can see on this chart here, you see all these bars overlaying each other. There's something going on. They don't just, go sideways like this for no reason. All right? It's not random. There's planning. That's what it's really happening, is planning. So you have just right here distributing of 21,000. There's 45,000 here. Are they going to bounce it right now? Is this being accumulated? Maybe there's going to be a spring and then break out to the upside. Because look at this. This is when it tapped this low, when it came to that prior, near that prior low, right? And look at the buying that came in, right? So the buying that came in was 1.5 times average volume, then 2.1 times average volume, right? And then all this shit, but it wasn't enough to significantly break trend on middle and higher time frame, higher time frames. Then it got sold and it's coming back to these origins. As it comes back to the origin, right here, what is this? I don't like to talk about patterns, but if you know what a wedge is, you know that, there's buying and then they're holding and then they're ready to pop. So it comes back in this volume area, this volume level, and tags it exactly. And it's holding. So something's going on here. I don't know. I'm not ready yet to pull the trigger, but when it gives me opportunity, I will. Anyway, so 210,000 sold up here, and then Puke Fest, and I don't know what's going on here. I'll just have to wait. All right. So what do we learn from this? First thing is that you want to see what the daily trend is, chop it up, see all the volume and all that crap in it, right? And then classify it. Is it accumulation? Is it distribution? Is it breakout? Those should be enough. Accumulation, distribution, breakout. And breakout, you can just lump it in with absorption as well over here, right? Because breakout is just absorption in one bar versus multiple bars, where you have classical absorption, where it's absorbing the resistance over multiple bars. Breakout is just one bar, absorb and go. So, you just put this in one of those three categories. There are other categories, but these are three major categories: accumulation, distribution, what is the other one? Breakout, and change of behavior. Anyway, without getting into all of that, you see it right here, holding back. As it pulls back on lower time frames, buying activity, hold, pull back, coming back to this origin. Is it going to hold or is it going to break down? Remember, the trend is still down. All right, daily trend is down, medium time frame trend is down, but we have buying activity in the background. So that makes you weigh both sides. Short term, buying activity and return to the origin from the bullish perspective. From the bearish perspective, trend is down, 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 and down. So what does that mean? It means wait, let it show its hand, and then because we don't predict, we just react, right? And so what's interesting to me now is this guy right there, here, the 45,000 here, that they're buying. See all this buying? Go here, 45,000 contracts in this sideways action. Is that because they want to break, and this is planning or redistribution before the break? Or is this reaccumulation across this volume line right here, right, to make a higher high? All right, that's all I have. Just if you want to learn more about this, just study Wyckoff. All right, take care, bye. But don't look at a lot of stuff online which is garbage, where they're just doing climax, automatic rally, or climax, secondary test, automatic rally, and putting in like a, what do you call it, a schema, but it's in hindsight schematic. That type of activity doesn't work. You have to learn how to read price volume action, and one of the best learning tools for reading the price volume action is the first study in the Wyckoff Division 1, where he goes over, I think, the New York Times study. That'll teach you the how to read price volume. It teaches the importance of climaxes, volume off the bottom, absorption, high volume when it doesn't hold being a sign of distribution. So, yeah. Anyway, take care. Have a good day. Bye.